Hello, today is Monday, August 24th, 2026. Here is your daily signal. According to Fortune, Scott Bessent is making headlines as the most interventionist U.S. Treasury Secretary in decades, aggressively tackling the nation's $40 trillion debt through expanded bond buybacks and direct currency actions. Bessent stepped into the Treasury role in 2026 amid mounting worries over the ballooning national debt and has since championed policies rarely seen since the late 20th century, including a $4 billion bond buyback plan and heavy intervention in markets, a strategy meant to reassure investors and stabilize financial conditions. On August 20, 2026, Bessent told CNBC, "We can grow our way out of that," referring to the immense debt, while Fortune reported his activist approach has extended to yen purchases as well. ING analysts, however, criticized the $4 billion bond plan, calling it rearranging deck chairs on the Titanic given the sheer scale of the debt. In the near term, these aggressive moves could calm bond markets and help maintain currency stability, but as government borrowing rises, fiscal deficits might widen. This could invite extra scrutiny from credit raters and financial institutions about the sustainability of U.S. fiscal policy, and persistent intervention could even shake international confidence in dollar stability. Next, we'll move to the shifting landscape in American retail. America's biggest retailers are adjusting to profound consumer and regulatory changes, with Fortune highlighting how Walmart's sales growth fell to a 6-year low as middle American shoppers, those making less than $100,000, cut back, even as wealthier customers continue to spend. These developments come against a backdrop of demographic shifts and government policy changes, with Walmart and Target both recalibrating their strategies amid economic fluctuations, tariff refunds, and evolving shopper profiles. Specifically, Walmart saw sales momentum slow in August 2026, while higher-income consumers drove what gains there were. Meanwhile, Target enjoyed a 3.8% sales lift in its second straight comeback quarter, boosted significantly by nearly $1 billion in Trump-era tariff refunds, which supplied $1.65 of every $4.11 in quarterly earnings. The result, retailers are likely to shift products and marketing toward higher-income households as lower-income spending stalls, and temporary earnings boosts from tariff refunds could encourage reliance on future regulatory actions. As shopping patterns fragment, companies may restructure store formats and digital offerings, sparking fiercer competition for lucrative customer segments and further policy-driven volatility. Turning from retail to the red-hot world of AI data, let's look at Micro One's latest milestone. TechCrunch reports that Micro One, the AI data specialist, has reached a $500 million gross run rate as the 2026 AI model training boom kicks enterprise spending into high gear. This milestone comes as companies ramp up investments to develop large-scale models, with Micro One providing critical high-quality training data for corporate clients around the globe. The company led by CEO John Lin has built a business model blending subscriptions with pay-per-use arrangements, capitalizing on the exponential demand for curated AI datasets. As TechCrunch notes, the $500 million run rate reflects the projected annual revenue based on current momentum. In the near term, Micro One surge may fuel even more competition and innovation in the AI data space, while giving the company financial muscle to expand services and attract additional institutional clients. Medium term, the landscape could see mergers, acquisitions, or strategic alliances as startups compete to supply the world's next generation of artificial intelligence. Now, onto the markets. International markets saw notable gains, with Germany's EWG up over 6% this month and EWD advancing 1.4% on the day. France, represented by EWQ, rose modestly, while the UK's EWU booked an 0.8% daily increase. Italy and Spain posted positive returns, and Chile's ECH led with a 1.95% rise today. Among commodities, gold jumped over 11% this month, with GLD gaining nearly 2% on the day, and silver surged over 16% monthly. Uranium URA was also strong, climbing over 5% today. In U.S. sectors, the S&P 500 advanced, led by a positive move in healthcare, with Roman 45 up 1.3%. Finance XLF and agriculture MOO both posted gains, while semiconductors drifted lower, with stocks down 0.4% today. Top gainers were RFI, soaring 226%, and TMCWW up 97%. MGN was the biggest loser, dropping nearly 98% today. That's it for today. You can find more news and details on our website. Goodbye.